Hey everyone, as the market continues to be choppy and quite frankly we expect it to last quite a bit longer, maybe through the first quarter of this year, which is really a direct result of markets essentially trying to price in these rate hikes that are on the table. We want to continue to look for opportunities in the meantime, and one part of the market that we are watching very closely is essentially metal and mining stuff. And one way of looking at this is through an ETF called, or ticker symbol is XME. You can see it in the upper left-hand corner here. Now the XME, I'm going to show you guys some of the constituent ETFs in there in just a second. But the XME ETF essentially is made up of, well, metal and mining kind of stocks. Now, let's do a couple things first. First of all, let's look at it through the lens of a weekly, long-term, multi-year chart. And if you look at it from that lens, you can see essentially we're building in a big base. This is just just the simple optics of it all. That's kind of what we're doing here. We've had a double bottom in 2016, 2020. We broke above a pretty important multi-year level last year, and then we've now, again, as I said, basically been basing for, well, really since May of last year, so that's coming up on, what, 3/4 of a year. Now, what's important when you look at all this is, how well is an ETF like that holding up, and what potentially, once, if and when it releases to the upside, what could be some upside profit targets? Well, first of all, again, the longer we stay in this choppy range, the as they call it, the longer the base, the higher in space, the more we could move to the upside. So one simple way of measuring some of this stuff is just kind of taking the difference between the highs and the lows of the range, which is this distance, and then just kind of adding that to the top of the range. And so when I do that, I get to an upside profit target as a first point of somewhere in the mid 50s. Right now, this ETF is trading in the high 40s, so we're looking at like 20% upside or so as a first upside target. Now, one thing that we really want to do that's crucially important to do is look at the constituents of this, and meaning like some of the holdings of it. And you look at us, pulling up my Reuters here, you can see stocks in there like Alcoa, which continue to hold in well, Newmont Mining, that I'm going to show you quickly, Freeport-McMoRan, Peabody Energy, Cleveland Cliffs, and so on and so forth. Let's just look at a couple of them. I'm going to quickly give you guys Peabody Energy, and then we'll just look at Newmont Mining, just because I think those are optically will kind of tell the story the best. So Peabody Energy, this is a company operating in the coal space. This is a little bit outside the realm of the real core basis of the ETF, but here too you can see a stock that essentially came off significantly and is building in a big base, so it could move higher. But let's have a look at something like Newmont Mining, which, again, not surprisingly, isn't going to look a heck of a lot different than what we just looked at here a minute ago. And again, you can see an equity that's essentially coiling, pulling in a nice base, and not exactly, but does in many ways look like the ETF, the XME that we just pointed out. So that's just one thing that we're watching very closely here is, where could some of the big next moves come from? And, looking at it through the lens of, again, the analysis we just went through, the XME ETF, again, is the Spider S&P Metals and Mining ETF, does look quite interesting. Again, momentum is still coiling up. It's still kind of neutral, but it probably wouldn't take a heck of a lot let me bring the correct chart up, for this to start releasing